The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Tom in Derry, New Hampshire. Hey, Tom, what's going on?
Mr. O'Brien, how are you today?
I'm doing great, man. How you been?
This is like old timers week. I heard Rick from British Columbia. I'm waiting to hear Greg from Long Island.
I like that. Totally, man. Totally.
By the way, your website, unbelievable. Watching that thing change over the years. You guys are doing a bang-up job. You got great guests, and
well, listen,
keep up the good work, man.
We appreciate you being out there. We never can do it without all you tigers and tigresses, Tom.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Always have a plan and believe in it. Nothing good happens by accident. Market-wise, let's take a look at it out here. We have the Dow down 321, NASDAQ off 80, S&P's down 37, gold contract up $15, trading at $1,093 an ounce. Silver up, folks, up a penny at $13.99 an ounce. Copper flat at $2.08 a pound. Light sweet crude down $2.06 at $33.92. Light sweet crude, folks, broke the B point, broke it with volume. You get a ABC structure on the way down. Pretty intense, man. That price projection on this ABC down, folks, is $28.92. It's a monster. Bonds, 10-year up 18 ticks, 126.26. 30-year up 1 full point, 25 ticks, 155.13. King dollar down 256 ticks, traded 99.24. The euro is up 45 at 107, and the yen is trading at 118.44. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? Well, we got action out here. There's no doubt about that, folks. We take a look at this SPY, and what you're going to see in the SPY is this. Last night, S&P's gapped down, didn't gap down, traded down 20 points, folks, at 9 o'clock at night. Bottom line, fast, furious, didn't have juice behind the move. What you're looking at out here is this. The SPY has just gone from 207 down to 197. Your benchmark that, basically what we've been talking about here is that benchmark is the high of October 2nd. Now, the high of October 2nd is 195.03. Okay? That level right there is where I expect, you're going to get a really decent bounce off of. What I think you're going to see right now is this, okay? Bottom line, market wants to go a lot lower. That being said, right now, I suspect you're going to see a little bounce coming into the close. That's it. That's all it's going to be, a bounce. Your real bounce is going to come in at 195.12, 195.03. And this is why. We've got below the lows of Monday today. Lows of Monday, we're at 198.59. At 198.59, we had 222 million shares traded. We bounced yesterday with anemic volume, bounced with 110 million. Today, what's happening is that you're down with much lighter volume, and that sets up two different things. What it does is this, is that on the weekly basis, we're 3 days into it, you're dealing with 436 million shares. Well, the number that we're going to be dealing with at the end of the week is 845 million. So bottom line, what I expect you're going to see out here, you're going to expect some kind of a bounce coming out of this area right now. And the markets certainly are not going to go positive. This is just a phenomenon that when the Dow's down, been down like 1,000 points in 5 days, you can expect a bounce. You can particularly expect a bounce because no one expects a bounce. That's kind of how this also goes too. I was talking about yesterday how no matter what channel you had on, people were saying, yeah, buy the dip, buy the dip, buy the dip. Well, guess what? All day long, and all of those channels, it's don't touch the market. That's That's just a phenomena that happens. We'll see where this shakes out. The Qs, the NDX 100. So we have at the NDX 100, that is down $1.59 right now. You've done 31 million shares. You're below the low of Monday, where we did 50 million. Yesterday, we went up with 38, and you can see you're down at 31. That's on the daily. On the weekly, because we'll get 2 more days in the week, on the weekly what you have is that the weekly thus far, we've done 121 million shares, and you're going into 173 million, and the benchmark is 233 million. So the correlation of the benchmark, now the benchmark on the Qs is a lot lower compared to the S&P. The benchmark on the Qs is 104.01. It's the same day, but it's lower. Volume, same type of volume, monster volume. So I expect when you get down into those levels, you're going to get a bounce. I suspect coming into this close today, we're going to get a bounce. We'll see how far it can bounce. But if you trade in the market, it is no doubt a trader's paradise out here. Okay, gold. What do we have with gold? Gold caught a bid, folks. It not only caught a bid, gold is over the December 4th price point. Now, you have 176,000 contracts, which is good volume. It's not 200,000, which would have been better. Bottom line, though, you're away from the price right now, the price being the high of that December 4th contract, which is 1088. So what does that set up? That sets up your next markup here. You take the top of that 1088, you take the bottom of the 1044, and you get $44. You can add 44 basically on top of that, and you're at about 1035, 1135 rather. So that's the next number that I expect we're going to see in the gold market as we run up. Now let's go over to the bond market, because the bond market actually gave one of the best signals, TY, this morning, and what it was is this. So the 10-year bond, right now is trading at 126.28. You've done 1 million contracts, which is great contracts, by the way. The bond market wants to run up to the highs that were generated out here on the 11th of December, which is 127. And when we look at the 30-year, it almost looks like the 30-year. Well, let's look at the 30 right there. The 30 is almost at highs right now, which is just amazing. 30-year, we're at 155.19. The closing high on the 30-year is 157.05. So you get 32 points. That's 32. That's 5 is 37. 47. You're 48 ticks away from a closing high, which is just phenomenal. Okay. To get back to what the 10-year did, though, what the 10-year did, and it's sold out twice now. It just popped over it, but you popped over that with lighter volume. The 10-year wants higher price, but guess what? You got a few sellers inside this 10-year. That is also giving an indication you're going to get a small bounce coming into this close out here today. Dow Industrials right now are down to 303. You get the NASDAQ off 75. S&Ps are down 35. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is down 302. You get the NASDAQ off 75. S&Ps is down 36. Percentage-wise, that's what you have out here, folks. Dow Industrials are off 1.7%. S&Ps 1.8. NASDAQ 1.5. Inside the Dow Industrials, the leaders versus the laggards. You only have one that is positive right now. Walmart is up 0.9%. The laggard, Chevron. Chevron is down 4.5%, down $4. You get American Express down $1.92 at 64.34. United Technologies is off 2.78, 3%, and Apple is down 2.67, 2.7%. If we go back to Chevron, because I want to show you something here. So, yeah, actually, let's go to the we'll go to the oil contract first. So, what you have with oil is this. Oil's down $2.07. You've done 496,000 contracts, which is a monster, by the way. It's blown away the B point. So the B point in oil, folks, was December 21st. The low there was 35.35. Now, the volume there was 290,000. But, you know, if you've been listening, you know, either my show in the afternoon or my son Tom and I show in the morning, the benchmark that I was taking on this was the prior day because the volume was so extraordinarily higher. It was 403,000 contracts. Bottom line, it blew that away. So your A point on this is $44.82, which was established on November 24th. Your B point is the low, 35.35. Your C point was on Monday when you had Iran and Saudi Arabia going at it. That market had opened up at 37.60. It went to 38.39, and then gave it up in spades. You broke the B point. You broke it with volume. So your probability is higher that you're going to get the full price structure. Now, that being said, you got to put a few of these together. That being said, this is so deviant because of the fact that, you know, I'm thinking that, okay, we're going to get a bounce simultaneously. And this was one of the main reasons. The volume, well, what happens in markets anyway is this, is that the correlation, we had gone to a lower low, had big volume. You got to a higher high yesterday, you had light volume. It gave it up in spades. The weeklies, you know, are going to come in with pretty good volume. What we're going into is always important. And the reason being is that what we're going into is a downdraft. And the largest portion of all of this, when you put this together, is that we've been down 5 days in a row. When you take that aspect, you got to wrap your head around this a little, because the Dow Industrials has just gone from 17,750 to 16,817. Bottom line, you'll, I suspect, get a bounce. The bounce is going to be on lighter volume, and all that is doing is building a much larger ABC structure on the way down. Now, if we go over to Chevron, because this is where the deviance comes in this market. So oil's in an ABC down. My take is that more than likely we're going to get it. You get oil on an ABC down, what you're going to see is that the selling inside the S&P is going to be extraordinary. It's just not going to be immediate, meaning the oil stocks. Why? Because you get Chevron down 393. That's the leader inside the Dow. Well, Chevron is down today on 10.2 million. You're going into 13.3. So Chevron's going to do probably 11 million, which is good volume, by the way. That's on the daily. Now watch what else it's going into, though. When you bring this over, what you're going to see is that Chevron's also going into 18 million, because when Chevron come off the lows, when Exxon came off the lows, they came off the lows with huge conviction, okay? So on the daily, you're going to need a lot more volume to get croaked. On the weekly, this is how it shakes out on the weekly. On the weekly, we are down thus far on 25 million. Well, you're going into 72 million, So you need more volume. That's the gist here. Now, folks, let's go over to our man, Mr. Darryl Martin. And don't forget, folks, Darryl, my son Tom, myself, we have a great show every Monday and Friday, the Nadex Bull Bear Binary Option Hour, 10 o'clock in the morning, 10 to 11 Eastern Standard Time. Darryl also has a great analyzer. As you're trading this Nadex product, you want this analyzer because there's a huge amount of different contracts. It is not going to tell you whether you go long or short or what spread to do. Well, it will tell you what spread to do once you know whether you want to be long or short. It's an incredible little piece of software. Darryl Martin, what's going on?
How you doing, man?
I'm doing great, man.
Loving these FOMC meeting minutes.
It's as intense as you can get. Well, actually, not as intense as you get. It's a fun trading market, that's for sure. What I mean by that, folks, is this: the price spreads, whether you're a bull or a bear, in a day like today, guess what? You all can make money. That's what it comes down to. You just got to take a position. So we've had swings that are incredible, man.
Oh, I know. They've been awesome. I mean, NASDAQ just flew down, flying right back up 20 points now.
Isn't that wild, man?
Yeah, it is. It's not like lightning. I mean, it's nice, smooth volatility.
Yep.
I mean, we're getting nice moves and decent speed, but it's tradable.
It is tradable.
So it's really
nice. Tradable. There's no doubt. If you haven't test drove the Nadex platform, folks, great time to do it. It's defined risk. Go over to our website. You see the banner on the top of the side. Hit that banner. Bring it up. They'll put $25,000 of paper money into your account. And, if we just pull up the NDX for a second and you take a look at it, what you're going to see is that you're going to see the spreads out here. We started the day out, the market, gaps down to this 43.86 number, climbs all the way back up to 44.57, which is a mind blower. Comes back down, and what it does, if I show you this, if you have the art of time in the trade, folks, what you're going to see is that it's just crazy. It comes right back down to where the strength was this morning, which is 4401. That had 20,000 contracts, and when we came into that baby, it had 6,200 contracts. That's what you're looking for when you're basically playing both sides of the marketplace. So I can imagine how many things you've been doing out here. Tell us a few of them.
Well, I've been going in and just going short on spreads, obviously, and futures.
Okay.
If I don't find a great spread, there's so much volatility. Sometimes you have to hop in and trade the futures and then use a spread to help hedge them off.
Yep.
And so that's, as you know, one of my favorite. That's my original trade strategy, I guess, that I did.
That's awesome.
It's just using married puts, married calls.
Yes.
But for day traders.
Right.
So a lot of people go in and they learn about buying a put to protect the stock or buying a call to protect a short stock.
Okay.
And but they don't realize that it's a week or it's a month away, and so it moves really slow.
Yes.
And even though you have that protection if you hold the thing the entire way, you also I want that protection now.
Right.
And I don't want to pay for. I don't plan on being in the trade for a month. I plan on being on it for 30 minutes or a few hours.
Okay.
And so I like to put that hedge on and get that full protection out of the gate. And so that way I can risk 2 or 3 points, but I can have a 10-point or 20 or 30-point stop loss, but only risking 2 or 3 points. And people say,
that's really
how
cool,
is that
man.
possible?
I know. So walk me through that trade.
Okay. So you go in, and let's say you're going to go short at 44.40 on NASDAQ.
Yep.
Okay. Then you go in and say buy a 44.40 to 44.70.
Yep.
Spread on NADEX, and you'd buy it at 44.43. So there's a 3-point difference right there.
Wow. Hey, stay right with us, okay?
All right.
We're going to walk through this, folks, because this is absolutely dynamite, folks, okay? You want to wrap your head around this. Darryl Martin, Tom O'Brien, you stay right there. We're coming right back. Dow's down 277, NASDAQ's off 67. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 267. You get the NASDAQ off 59. S&Ps are down 30. We're talking about our man, Mr. Darryl Martin, and we're talking about one of the strategies that he does set up, and we're going to walk through this strategy. Okay, so I'm looking at your chart here.
All right, so on here, let's say you're going to go over here and you're going to go short, say at 44.40.
Yeah.
Okay, so I get basically all red stuff. That means I go short.
Sure.
without going into all the details.
That's right. No, that's cool. Yeah.
And so let's say there's a 44.40 to 44 to 70 as an example.
Yep.
Spread. And I buy that, which means it can make money from, where I buy it up to the ceiling of 44.70. So let's say I bought it at 44.43.
Yes.
So I can lose down to 44.40 on it because it's an option.
Yeah.
So it has a limited risk. So I got 3 points of risk. And on NASDAQ, that would mean, what would that be? $60.
Yes.
Okay. But since it's a 30-point spread, I can risk in 3. I got 27 points potential profit on it.
Yep.
Okay. But I'm going to go short because I think the NASDAQ's going down.
Right.
So I sell the NASDAQ. I buy 2 spreads in this case.
Yes. Because each spread's $10, right?
Each spread is $10 a point, whereas NASDAQ's $20 a
Exactly.
point. So I need 2 spreads. So I buy 2 spreads. My risk on that is $60. I short the NASDAQ. And basically, if it flew up against me by 30 points, I'd be down $60 because I'd make
Man, that's intense. Okay.
20 on one, but only be down 60 on the other.
Okay.
I'm riding the NASDAQ down, so I don't have any cap on profit. I'm not worried about proximity and all that stuff, But if it flies against me, I mean, the thing expires, here at 4:15.
Right.
So I'm getting maximum, if you know options, I'm getting maximum gamma, maximum delta, which means the option is moving as fast as the underlying market is.
Yes.
If it's going against me. So I'm getting just about 100% 1-to-1 protection after that 3-point loss. Which, I mean, a 3-point loss on trading in FOMC is nothing.
Well, what you have here, folks, this is what's so cool about this. So picture, we've been talking about the different swings inside the marketplace. This is a great strategy for day trading all day long. Because what happens is that you're giving up a very small amount for a very small amount of loss when in a market like this you can make a lot of money or lose a lot of money very quickly, which is really cool, man.
Well, and what happens is there's 2 things I found that happens. One is it's sort of funny because it makes it a little bit boring. Because you're like, okay, I'll lose $60 if the trade goes like 30 points against me, or 10 points, or 20 points, or whatever. But I know where my max loss is going to be. It's going to be $60. If it gets all the way to the top of where that thing stops protecting me up at 44.70, hey, I got to hop out of the trade.
Right.
Okay? But my risk isn't increasing. I don't have to make a choice when it moves 3 points against me.
No.
Like right now, if it moves this far against me, I got to get out. I'm not going to decide, am I going to take more risk? Am I going to get back in? Am I going to go the other way?
Exactly.
And that's what gives your heart rate, that big boom, 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 on every single tick.
Yeah.
I hop in on this trade. This thing's going up, down, up, down, up, down, up, down with me. And then finally, boom, it just flies down, grab 30 points, $600 a contract, I'm out 60. Okay, so I'm up, 540 on the trade.
Yeah.
So very, very simple. Another thing is a lot of people, when they see this kind of volatility, they get afraid and stop trading. I've seen that a lot. They're like, oh, it's kind of volatility. I just need to walk away today. And this is where the real money is made. But it's also where the real money can be lost. So they'd like, hey, I'd rather just get out of the way. Well, with this, it allows you to trade that crazy volatility, but not take on that crazy risk because you have a solid hedge that you put on at the same time.
Exactly.
And then the third massive benefit, as you notice, went down, took off profit. I use these little bitty arrows you can see here.
Sure.
That's my trailing stop. I put it 3 ticks above it. Okay, when it hits it, boom, I'm out of the trade right here.
Yeah.
Hey, not bad, locked in 30 points. If it keeps going up, which right now, I mean, it's flown back up another 30 points.
Right.
Right now, I can make money on that long hedge that I bought. I still have it. There's no value in it when I took profit.
Right.
So let's say it ends up going up to 44.50 or 44.70 or whatever. Who knows by the end of the day here? We got a little bit of time left.
Sure.
And definitely possible on FOMC day. I mean, right now the hedge is about at break even. Okay.
Yes.
Just of all the so I'm only out of that $60 original, down about $20 at the moment. Okay. Per contract. But if it decides to keep flying up, then I could actually end up making money in both directions, but only having a $60 initial risk on my chosen choice to go down and go short.
Yeah.
So, I mean, it makes it more relaxing for those of us that are used to the volatility and love it. It also makes it boring because you don't have to worry about, do I get out? Do I take profit? Stop loss? What do I do? And then the second thing is, if you're afraid of the volatility and you learn how to do this, you'll learn how to embrace the volatility. And then every once in a while, nothing that happens often, but every once in a while you get that bonus trade. And you make money in both directions on a trade by putting on that hedge, and then that hedge ends up profiting as well.
Yeah, it's huge, man. I can't wait to do it because I get my head wrapped around it now. I can see that because what happens, folks, because these contracts, and I trade both. I trade the NDX all day, all night, and I trade the Nadex Tech 100. It's the same thing.
Yeah.
And I haven't done it as we just talked here. But I will, because that's a better way of trading than me just trading spreads. There's no doubt, man. Yeah.
And I actually taught this, I want to say it was like 4 years ago.
Yeah, I remember, even at
New York
your
City.
program, we talked about it before, and
Yeah.
I just didn't get my head really wrapped around it, man.
It was the first strategy I ever taught. I taught it in New York City at the Traders Expo, which me and you both
That's
were
right.
going to.
That's right. Right. Yeah, right.
And we're both going to that again up here in February.
February. It's a beautiful thing.
And I'll be out there, and you'll be out there, and we can pull charts up and show anybody who's there exactly how I do it, and how you're doing it and everything, and put it all together.
Yeah, because what happens is this. So picture this, folks. You have these contracts that are 2 hours, but, as Z's saying, great description, Darryl, number one. I don't know if you've seen him in the den. But what you also have, once you really wrap your head around this, folks, you can do these overnight. There's a lot of different ways that you can swing this deal. You're giving up a little bread, but guess what? With nice volatile markets, I suspect that is going to be, it's a nice way of chipping away at it, man. That's the bottom line. You don't have to hit grand slams, but you chip away at a volatile market, and it'll blow your mind that how many grand slams you hit, man. I mean, it's pretty sick because it's just the movement is so fast, and there's so much movement both up and down. Wow.
And for those who are like, I don't know about that Nadex thing or that binary thing or whatever. I mean, I don't know a stock trader out there, at least that has a clue about options, that doesn't like putting on a put or a call to protect their position.
Yeah.
Right?
Oh, yeah. There's no doubt.
So why there would be a future trader or a forex trader that would not want to protect their intraday trading positions?
Right.
Would be beyond me.
Right.
So it's just, but what they're looking at is they're looking at like weekly options or monthly expiration options.
Yeah, different animal.
And they move really slow, so they don't give you great protection. Like it moves 10 points against you, you get 5 points of hedge. This thing moves 10 points against you, you're going to get 9 points of hedge.
Exactly. All right.
And so,
and you're not paying. You're not paying up, man. That's
because you're only paying for in this case, 2 hours of premium?
Right. So so when we say paying up, folks, that has to do with the time premium, because that's what you're paying for options almost all the time. It's the time. So you're paying for a couple hours. Well, you want to be flat at the end of the day anyway. You don't want to pay for something you're not going to be in.
Exactly.
Amazing. Well, listen, man. Thank you so much. You have a great night, great trading, and of course, we look forward to the show Friday morning.
See you then.
Thanks, Darryl. Have a great one, man. Have a safe one. You stay right there, folks. We'll be coming right back. You get the Dow down 244, Nasdaq's off 54, S&Ps are down 28. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is down 259. The Nasdaq's up 57. S&Ps are down 30. And inside those Fed minutes, folks, this is what you had inside the Fed minutes. That that came out at 2 o'clock today. This was the last meeting where they finally went up on short-term rates 0.25%. The Federal Reserve's decision to raise interest rates last month was a close call for some policymakers who worried about too low inflation and received assurances that their colleagues would closely monitor its progress. Some members emphasized the importance of confirming that inflation would rise as projected and of maintaining the credibility of the Commission's inflation objective, said minutes of the Federal Reserve Open Market Committee's December 15th and 16th meeting, which was released 2 p.m. Eastern Standard Time today. The minutes also indicated that some members believe the risk attending their inflation forecast remained considerable, even as the committee was now reasonably confident that in the expectation that inflation would rise over the medium term to its 2% objective. The 10 voting members of the committee decided unanimously 3 weeks ago to raise the benchmark federal fund rate by 0.25% to 0.25 to 0.50, so 0.25% to 0.5%. The move marked the end of an era from near zero rates dating back to December 2008. The minutes also showed almost all FOMC participants now satisfied the committee's criteria for beginning the policy normalization process. Now, if we go over, I want to show you something here. If we go over and take a look at this, because this is pretty cool. If we go look at the oil market, and what we're going to look at here, if you take this oil market up, I'm going to put this back. Let's see. I'm going to put it back 4 years. I'm going to put the continuous contract up. And what I want to show you, and this is what I suspect, they very well could be looking at also. And this is what it is. Now, the wild thing is oil's on an ABC structure on the way down to $28. Now, that being said, oil in 2015 went from a price point of, there she is, let's see. 2014, rather. No, 2015. 2015, where's 2015? There it is. So, yeah, no, 2014 to 2015, because that's what you're looking at. So, oil went from a price point of $94.95. So, it went from $94.95 down to a price point of $45. Now, that $45 level, folks, okay, was January 23rd of 2015. So as oil came down, that's where that CPI kicks in a big way, because that's deflationary, right? Now, it's going to be a lot harder. Well, it's not going to be that much harder at $28, but at $30, at $35, you can see the gist of it. That you start the difference between 2015, 14 and 15, and 15 and 16 is a big difference because oil traded at $45. So inside the CPI, for energy that would be, you're not going to have the deflation factor as large. That's how that shakes out. We'll see where the food factor does shake out. So what I expect you're going to see is and then the largest one, by the way, inside inflation is the wage factor. The wage factor is a big number, and we know that one of the largest employees in the world, just Walmart, bottom line, even if it was a quarter, they went up on wages. So what you are not going to have is you're not going to have a deflationary number inside of that. So we'll see where that whole thing ends up shaking out. But it looks to me that we are going to have inflation kick up. Nothing heavy, but I do expect we're going to have a kick up. The gold market out here, bottom line, wants higher price. It took out its swing point, took it out with volume. If we go over to the XAU and HUI, XAU up $16 today. You're at 1,093. This took out its swing point. I expect I'll get the volume tonight, but I suspect we also more than likely have volume on the move. The HUI, not as up as much. The HUI was only up $3. So what's going on there? Let me just see something. What's kicking that XAU in? Oh, no. Okay, I get the wrong number for us. The XAU is only up 70 cents. It's up 70 cents. If we go take a look at a few of the gold equities, an Eagle, yeah, that's good. You get volume behind the move. 2.6 million. We had 2.3 yesterday. You're going into 3.4. That's $29.14. You're laying right underneath it. It's always nice when you're going into swing points and you're laying under those swing points with volume. And if you would like to test drive the the gold report, folks, you can do that by coming over to our website at TFNN. You go to newsletters, you go to investment newsletters. You can test drive the gold report 30 days absolutely free. If you'd like to test drive my daily newsletter, Market Insights, you go to newsletters, you go to trading newsletters, can test drive that 2 weeks absolutely free. Indice volumes out here today, I expect they're going to be flat. Yeah. Well, they're not going to be bad. So right now it's 670 million on the NYSE. That should kick in like 900 million. On the Nasdaq Composite, you're at 1.7, so that's going to kick in 2 billion rather. On the SPY, the SPY is going to be light volume. You had well, not light, but 124 million. Your swing point has 182. 2 days ago has 222. Now, in the SPY, this is going to be cool coming into the close. So check this out, folks. When I talk about failure on price and volume at highs, what you're going to have here, this is going to be a literally close call. This is going to be wild. So the SPY is at 198.53. If the SPY closes at 198.59 or higher, that is a failure to take out a low. It's a test of a low with lighter volume, rejects lower price. That is saying the bounce is also going to come in. So this is going to be wild watching this. Particularly, this is what's so weird about this, folks. It's really unusual that you can actually get a bounce going on a Thursday after you've had 3 bad days. The QQQ, we take a look at the QQQ. That being said, I think we're going to go in for one. That's my point. You go at the QQQ, we're at 108.08. We've hit 107.41. We've done 37 million shares. It's broken 50 million. And the number on the Q is 108.12. And right now we're at 108.09. So this is going to be wild watching these next few minutes. Because those pennies, by the way, make a difference. They absolutely make a difference. Now, if you get the bounce, I expect what you're going to see. You're going to see the bounce on lighter volume. And what has that just done? Well, that would be setting up a much larger ABC structure on the way down. Why? Because we know that we've come down on volume. You bounce on lighter volume, guess what? That's an ABC structure on the way down. What we do have now in the Qs and in the S&Ps, particularly in the S&Ps, We have 1, 2, 3, 3 lower highs just since November 3rd, and now we have 1, 2, 3, 4 lower lows. That, folks, is a monster downtrend. You stay right there, folks. We're going to be coming right back. Dow Industrials down 275, NASDAQ down 63, S&P's off 32. We're going to be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You get the Dow down at 282, NASDAQ down to 65, S&Ps are off 33. And as we let's go over to the small caps. We take a look at the small caps out here. IWM, folks, is just about at the bottom. This has been the dog on the way down. This has been the leader on the way down. The IWM is at 108.62. Your swing low out there is 106.99. The swing low from the August 24th level is 108.26. So we got into that today. So watch how this shakes out. You get 31 million shares versus 83 million. So that's on the daily. If we bring this back and we take this on the weekly, what you're going to see is that we thus far we've done 126 million. You're going into 226 million. Okay, cool. You're going into 260 million, and you're going into 285 million. The price here that it does want to whack is that 106.99. Now, on the small caps, and this would be cool watching this shake out. The small caps, if you do close where we are right now, you can make the case, I can make the case that you tested the low of the week of the 28th, August 28th. You tested it with lighter volume. You got a rejection of price. So the next setup would go like this. The next setup would be you came off the highs of 120, went from 120 to 108. The 120 was established December 4th. It's going to be really hard for the small caps, the IWM, to even get above 111.53. What I'd be looking for is this. You'd be looking for that it bounces up to that level. You have lighter volume, and then guess what you have? Then you have your ABC structure on the way down set up. Your 8 point on this baby would be the 120. Your B would be the 108. So you're dealing with 12 points on the way down. On the way back up, you get, let's say 112. And you're dealing with, what did I say? Oh, that's pretty wild. So that would lay out a 100. Let me see where this shakes out. Because that would lay out, if in fact it went that way, that would lay out 100. Yeah, this is pretty cool. Because what does happen is that the small caps also have a high volume swing low from October of 2014 at 103.54. But the price projection, if we did lay that out, would be a 100. And you can see small caps are a mess, man. This is interesting. So the small caps right now are trading where they were trading in November of 2013. That's pretty intense. That is no doubt pretty intense. If we do go back over to those, I'm glad that JB's bringing up those 3 black crows, because if you go back to the SPY for a second, folks, these 3 black crows are a game. And the 3 black crows that were established out here, that was in the first downdraft in August. It never got over them, and couldn't handle it. And the way this market is operating, that's what it looks like it's setting up for in a longer-term basis. We go over to Apple. We take a look at Apple. What you have with Apple, the reason you always want to watch Apple, too, by the way, folks, is because of the weighting structure that is inside, that Apple is inside the Index 100, the Dow Industrials, and the NASDAQ. Apple is making its way down to this 92 area. What we have done on Apple also, 64 million shares today. Now, this is where you have a differential. You did 67 million on Monday. So you can see Apple does continue lower. I suspect that'll get a bounce too, but Apple is in deep trouble. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials are down 256. NASDAQ's off 58. S&Ps are off 30. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Hope is a renewable option. If you run out of it at the end of the day, you get to start over again in the morning. Market-wise, let's take a look at it out here. We had the Dow Industrials down 252, NASDAQ off 55, S&P's down 26, gold contract up $14.60, trading at $1,093 an ounce. Now, if you have a gold, folks, takes out the December 4th high, takes it out with nice volume, okay, not higher than the December 4th, but it cleared that price point of $1,088. Good volume. I expect you're going to see gold run into the 1100 price point. Silver's still the dog out here. Silver was up a penny at $14. Silver's got to get some wide price spread accelerated volume underneath it. Oil down $2, $33.98. Oil, folks, blew out its swing low of 35.35. Did it with volume. It's an ABC structure on the way down. Your price projection is $28.92. Yes, absolute mind blower. But bottom line, when you take out a B point of an ABC structure on the way down and you have volume behind the move, your probability is pretty good that you're going to get down into that price projection, which is A to B equals C to D. Bonds. You had the 10-year up 20 ticks, 126.28. 30-year up almost 2 full points, 155.20. Bonds, no doubt, still want higher price, lower yield, mind blower. Yes, absolutely. King dollar down 226 ticks, 99.27. The euro up 38 at 107, and the yen's trading at 118.46. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at it. If we start with the SPY, we look at the SPY, this is what you have. So your benchmark that I suspect we want to get into here is this 195.03, which is the high of October 2nd. What do we do out here today? Okay, so Monday, you got down to a low of 198.59. We did 222 million shares. You went higher yesterday. You failed on price and volume. We got to a high of 201.90. You did 110 million. You gave it up on price. What do we do today? Guess what? You got under the low that was established out here. You had lighter volume. We did 140 million versus 222, and you closed over the low, which is 198.59. What that sets up, folks, is a small bounce. I expect what we get here, we're building a larger ABC structure on the way down. And now it's going to be pretty wild. It's really hard to get a bounce going on a Thursday and Friday when you've been down so bad, but that's what I expect you're going to see out here. It's deviant, no doubt. It's a beautiful thing, though. The Qs. What do we have with the NDX 100? Same type of setup in the NDX. Now, the NDX is a little bit different because your benchmark is lower, meaning if we look at the Qs, it's 104.01, which is the high of October 2nd. That's both of those benchmarks. Same type of phenomenon we did with the Qs, though. When the Qs had gapped away on Monday, we gapped down, we did 50 million shares. Yesterday, you go higher, and we do 38. We get under the lows of Monday, today. We go down to 107. You do 41 million, and you reject the 108.12. Bottom line, that's also saying more than likely you're going to see a little higher price, lighter volume. That sets up the next leg down. That's the building cause aspect of markets that go up and or down. Gold contract. What do we have with gold? Gold has been building cause to get into that December 4th high. That's where Draghi, basically came out and the euro, went topside because the market was looking for more monetary stimulus. Bottom line, you had gold go to 1088. We had done 209,000 contracts that day. Dollar got crushed that day. Bottom line, we did 178,000 contracts. You cleared the 1088. That sets up about 1137 in the gold market. That's going to be wild watching this whole thing shake out. Silver. What do we have with the silver market? Silver needs a bid. Silver still can't catch a bid. We did 39,000 contracts out there today. You're at $14. Silver is an animal into itself, meaning the volatility in it. But bottom line, it hasn't caught a bid. And that's divergence that I really don't like seeing inside the metal market. The 10-year notes. What do you have with the 10-year notes? Okay, so we did 1.1 million, which is good volume, by the way. The 10-year notes are trying to get into 127.10. Right now, we're at 126.27. Where the 30-year, now this is pretty amazing. The Fed, no doubt, went up on rates, looked to go higher. The 30-year was up almost 2 points, 1 full point and 32 ticks. We closed at 155.20. Well, the high in this 30 years, 157. The closing high is 157.05, 157.16. You're right next to it. These things are going to go for it, which is going to be just amazing watching this whole thing shake out. King dollar. What do we have at King dollar? We take a look at King dollar. King dollar got over the highs of yesterday, closed underneath them. It looks like, King Dollar's having a hard time getting into the December 3rd level. That's where the King Dollar had got crushed, the dollar index this is, when it went from 100.70 down to 97.70. So we'll see how King Dollar reacts, but I do expect that good old the dollar index will start making its way back down to this 97.84 level. Oil. We go to the oil market. What you have with oil, this is pretty amazing with oil, man. Oil just took out this level and took it out in spades. Let's see. There we go. Oil traded from a price point. Well, when we look at Monday, you had the Iran, Saudi Arabia deal. On Monday, oil had spiked. This spike open. It opened at 37.60. Traded up to 30. Opened at 36.90 rather. Traded up to 37.10. No, sorry. Opened at 37.60. Yeah. Traded up to 38.39. Sold off from that point. Today, what we did 500,000 contracts taken out below, and we had 409,000 contracts. Bottom line, big numbers. It looks that you have that oil contract on an ABC structure on the way down, running into this 28.92 level, which is just pretty amazing, folks. No doubt about that. Some of the Dow stocks out here. This is what we're looking at. Some of the Dow stocks. You had Boeing down 222. Oxy was off 304. Honeywell was down $1.17. 3M was off 297. Walmart was the only stock that was in the green today. That was up 63 cents inside the NDX 100. Of course, you had Apple getting taken south, Lam Research, Skyworks, and Seagate Technology. You stay right there, folks. We'll be coming back. We got a great guest coming up for you. Dow Industrials closed down 252, NASDAQ off 55, S&P's down 26. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had the Dow finished down 252, NASDAQ off 55, S&P's down 25. And as I said, folks, okay, we got a great guest coming up for you, Bob Iacchina. Bob, folks, his website is pathtradingpartners.com. Bob, welcome to TFNN. How you doing today, Bob? Let's see. Okay, we will.
There, you got me now?
Yes, sir. Hey, Bob, how you doing, man?
Good. How are you? It's good to be here, man. Thanks for having me.
I appreciate you coming on. And, folks, Bob has been in the markets for years, but I'll let him explain that to you. He also specializes in the Nadex platform. Now, you talk about a volatile market and some defined risk, huh?
Yeah, you know, it's one of the things we got involved with Nadex. I wasn't really too keen on binaries when they first started. And the main reason that they got exciting to me was when we finally had a regulated option. Right?
Oh, yes.
I mean, you're very aware of some of the crap that went on in the Forex markets. And I remember one of the worst things that I had to deal with early on was people asking me if Forex was a scam. And I kept having to explain to them that Forex is a market. Forex is not where the scam is. And Nadex binaries have kind of taken the sort of stigma off of binaries and given you like a real, legal, regulated place to trade what happens to be, in my opinion, one of the best products out there for new or novice traders with that regulated risk you mentioned.
And, you know, you just brought up the Forex market. So you like the trading the binaries in the currency markets. Is that correct?
Yes, you know, especially in the U.S. I mean, one of the things that Dodd-Frank did was it took away the ability for the retail customer, the regular trader sitting in his house like I am, to get to FX options. Well, now we've got FX options. You've got 10 pairs on the binaries, 8 pairs on the spreads at Nadex. So it's given me an opportunity to participate in options on Forex, which I haven't been able to do, again, thanks to Dodd-Frank.
Yes. You know what is intriguing, Bob? Well, here, first off, can you give us a little of your background, please?
Yeah, it's a long story, buddy. I don't know how much time we have.
It's a beautiful background, folks. You're going to recognize this guy. You know, I got hooked up with Bob, and I had listened to him many times, whether it's on CNBC or Bloomberg, and I wasn't kidding. I always liked you, man, on the air. Do you know what I mean?
Well, I appreciate that. I appreciate that a lot. So, essentially for me, I've been doing this for about 24 years. I started off on the trading floor down at the CME. I've been in almost every pit they had to offer between the CME and the CBOT. That's actually my old badge up on the wall. A little bit of narcissism for you.
I like it.
So at one point, back in 1999, CNBC came down to the trading floor and asked for about 5 traders that could put a sentence together.
Okay.
There wasn't that many of us back then who put a sentence together.
That's pretty funny.
I was one of the 5 they picked to do interviews, and I've been doing probably, it's about 15, 20 a month for the last, say, 16 years or so that I've been doing. So I'm a guest analyst on CNBC, on Bloomberg, on BNN in Canada, on Stock Voice in Tokyo, Phoenix TV in China, Sky News in Australia. So I've done a lot of these individual guest spots. So a lot of my background has been on general market knowledge. And like you mentioned, I got hooked up with Nadex recently, and I've been trying to push most of my public efforts in that direction.
You know, like today, it's really nice when we have highly volatile markets for whether you're a bull or a bear, for traders in general. And I was talking with another trader a little bit earlier, and it was intriguing because when you, like, I like trading the NQs, and I trade the NQs and the futures and, you know, and the Nadex product. And what he was bringing up, which was pretty cool, is that when you have swings like we had today, it's really intriguing that you can actually hedge using the spreads and the Nadex product versus the futures, which is pretty cool, man, you know?
Yeah, the spreads especially. I mean, they're a really, really good hedging product. Sometimes with the binaries, you get capped off on your hedge because of the yes or no bet nature of the binaries. But with the spreads especially, you can hedge stuff off. And really, the only time I use the futures now, and I hate to say this because that's my background,
yes,
is if I have a binary position, a spread position, that I want to kind of hedge off in a mini. I'll actually use the futures there, but otherwise a lot of my main trades go on in the spreads and the outright binaries at Nadex.
Right. And of course the volatility inside the currency markets have been phenomenal, right?
Yeah, it's been phenomenal. I wrote a post on Nadex the other day I'd encourage you all to read, is that if you have occasional bouts of insomnia like I do, 2 a.m. to 7 a.m. in the currencies is beautiful. I mean, some of the moves are so exaggerated because the London traders come in off of the low volatility of the Tokyo markets, and they spike that stuff in directions that don't happen once the New York traders get back in, and it's sort of both markets trading simultaneously. It's about a 3-hour overlap, as you know, between London and New York, and that's when things start to slow down, when London closes. So if you have individual bouts of insomnia, or you have a day job, and you just want to make trading sort of an income augmenter, or you want to slowly move into getting rid of your day jobs, those 4x binaries and 4x spreads from that 1 in the morning, 2 in the morning till about 6 a.m. is a great place to start.
Nice. Now, tell us, you know, your website is pathtradingpartners.com. So what do you do over at your website?
Well, we do a couple of things, right? We have a philosophy of trading in general. So I've been fund of funds manager. I've been a trader on the trading floor. I've been in an investment committee. I've worked at banks. So we believe that you have to have a strategy in place with which to implement your opinion on the market. So we actually teach strategies where you can look at a chart, figure out not only the direction it's going to go in. One of the good things about binaries is it's yes or no, right?
Yes.
But the best possible scenario is, let's take crude oil. Right now it's trading below 35.
Right.
If you think for some reason, which I don't, it's going to pop up above 35, let's say you have a technical pattern or a price action pattern that tells you it's going to get to 36.
Yes.
Well, then I'll look at a 34.5 or a 35 binary to make sure that it just clears it. So we teach a lot of those strategies. We teach actual price action strategies, and then we teach them how to apply to binaries, and then we teach how to apply them to spreads as well. And we actually get involved with the Greeks to a certain degree as well, to try and give people a background of why price is moving the way it's moving.
Because that's crucial, because the Nadex product, it is an option product. So it's really cool understanding the strategy and then understanding the time, folks. The time, the premium is a big deal. And which is really cool, of course, with the Nadex product, is that you're not waiting a week.
You know what I love about this stuff, Tom? And I'm not just, I sound like a shill right now, but it's the truth. A person can actually get the base knowledge, the novice knowledge of options by trading at Nadex.
Yes.
And that can actually advance you into equity options, into futures options, where you otherwise couldn't make that jump. Because the stuff gets so complicated when you try and learn options from scratch.
Yes.
But really, you don't necessarily have to worry about rho, because rho is the sensitivity of options to interest rates. And since Nadex is daily, as you know, you're not going to have any sensitivity to interest rates. So you can just get a hold of delta, theta, and gamma, and just learn those 3 things. And it can actually springboard you into other options trading if that's what you want to do.
Yeah, it's absolutely fabulous. Well, listen, it's a pleasure having you on. We're going to have you on quite a bit, and we really appreciate all the feedback. The website, folks, is pathtradingpartners.com. Hey, Bob, you have a great one. Have a safe one, and look forward to speaking to you again.
You too, Tommy. Thanks again. Take care, everybody.
Thanks, man. Have a great one. Have a safe one. You stay right there, folks. We're going to be coming right back. That website now is pathtradingpartners.com. And, folks, on this Nadex product, you absolutely want to get your head wrapped around how these contracts work. You can go over to nadex.com. You can go to TFNN. You can hit the Nadex banner. You can test drive this absolutely free. You can bring up the account. They'll put $25,000 paper money into your account. Don't forget, Daryl Mott, my son Tom, myself, we do a Nadex program, Bull Binary Option Hour, every Monday, every Friday, 10 to 11 Eastern Standard Time, right here in the morning. You stay right there, folks. We'll come right back. Dow finished down 252. NASDAQ off 55. S&P's down 25. We're going to be right back.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now, they closed down 252. You had the NASDAQ closed down, 55. S&Ps are off 25. And when we talk about some volatility out here, it was in spades. There's no two ways about that. From highs to lows inside this market out here, it didn't matter whether you were a bull or a bear out here today, folks. You can get both sides. At 8 o'clock in the morning, we were at 1971 on the S&Ps. By 11, you were at 1995. Back down to 3 o'clock, you're at 1971. And at the close, you're at 1986. And that's one beautiful thing. And right now, we got our man, Mr. John Logan. Now, don't forget, folks, we came into 2016. On 2016, we got a new schedule at TFNN. Monday, Wednesday, Friday, we go from 8 o'clock in the morning to 5 in the afternoon. Our man, Mr. John Logan, kicks us off every morning. Outstanding show. Tuesdays and Thursdays, we start at 7 o'clock in the morning. We go from 7 o'clock in the morning to 6 o'clock at night. Nico and Paige have a health show. Keep you healthy. We want a little exercise and want eating some good food. And just take it step by step, folks. Why? Because, guess what? You stay healthy, man, you can be happy. Because if you get a lot of bread, it's not going to matter if you're not healthy. Bottom line, John also, as he walks us through the markets every trading day, 8 o'clock to 9 o'clock, he has a great TAS market scanner, TAS profile scanner. And what this does, folks, which is so cool, you can wake up, you can be having a cup of coffee, you can be reading the paper, you can be listening to him simultaneously, you can be trading, you can do all of the above. The reason I'm saying that's what I do every single morning, and it's a beautiful thing. John Logan, what's going on?
God, man, good to be back with you. This volatility is crazy. I really enjoyed hearing your previous guest about the the ways he's kind of evolved into taking advantage of some of the volatility. It was very interesting.
And folks, what Bob is going to be a regular guest. We're going to get him on, and he's going to get our heads wrapped around, this is just another piece of the puzzle around these currencies. And, I don't want to keep you up 24 hours, but, we'll see.
I was listening to that. Keep your day job and stay up all night and trade currencies.
Well, you know what we both know that. See, what happens, folks, is the currencies. The buyer, I like the spreads, okay? Because the spreads to me is like trading futures. You know what I mean?
Yeah.
The binaries, folks, you can hit once in a while, but guess what? What happens in the currency markets? There has been more volatility, and there's different. The key inside, one of the keys inside this Nadex product is to lay out the strategies. So we'll find out what kind of strategies Bob's laying out. We'll learn them, and we'll see how this works out, man. So it's going to be pretty cool.
Awesome. Hey, I got a stock on my screen right now. AMAT.
Oh yeah.
This was like, you remember this back in the day trading days? This was a nice stock that was.
This is so cool that you just brought this up. So check this out, folks, and I'm sure that I have some listeners that have been out there forever. And AMAT, John, this is pretty sick. AMAT, these ABC structures that I do.
Mm-hmm.
So AMAT did an ABC structure, folks, up for 2 solid years. It was the largest one from 1998 to 2000. It was like crazy. It was like it just kept going. So, talk to me about this.
Yeah, I remember talking about back then. I mean, you remember how crazy it was before 2000 in the NASDAQ. And I remember. I mean, I was in Florida at that time. There was really no way to get quotes over the internet, reliability, all that kind of stuff. So it was either go to New York or Boston or go to Florida,
right?
Where some of these rooms were. And I went to Florida. I went south, of course.
Yeah.
And some of these guys would come into the room. They go, "Oh, I'm gonna trade now," and it was crazy stories. I remember a guy who came in with a pickup truck, rusted out, borrowed $10,000 on his credit cards, came in there and kind of threw the money down. He had his account up to $700,000 trading the AMATs of the world, the Yahoos, the Qualcomms, the crazy stuff back then.
Right.
And it was just a different time, but it was amazing how people would trade these stocks going long all the time. I mean, never, no fear, nothing.
No, I know.
I mean, it was incredible.
It was. Do you remember iOmega?
Oh God, yeah.
iOmega. This is like '94, I think, '94 or '95.
All those ones now that are like in the dirt.
Exactly. Crazy.
That's crazy. But yeah, AMAT now really, kind of flash forward here. Looks very, very attractive, believe it or not. We kind of had that breakout above profiles on the long term around 17, 18. We come back. It was kind of on my radar screen this morning. I was like, you know what? We had a profile up here below. These things kind of act as magnets, and I want to see this thing come back to around 1738. It came down and just kissed it today, in fact. And that's our long-term support area for this thing right now. I think somebody could get a couple of points in this on the north side.
Right.
So I like the setup. So I got the setup, believe it or not, out of this thing right here.
You know what? So check this out, folks, okay? When you take a look at this, the TAS profile scanner, it's so funny, John, is that the market was so bad on Monday, folks, that I was going through saying, okay, what are the strong stocks? Because I wanted to see it through the TAS scanner. Well, you probably did the same thing because there was only like 5 or 6 stocks, and AMAT was one of them on Monday, right?
Yeah.
And I says, oh, this is intriguing, man. And, it's like, oh, this, so I know what you're saying, man.
Yeah, it put that on radar screen, but it also said, hey, you know what? Here's the inflection points that, I mean, it's not, some of them you have to wait, and they put them on, you get them on your radar screen via the scanner, and then you say, okay, well, this is where I got to dig in.
Exactly. Right.
So, but there's some really good stocks that are, believe it or not, still on we call them the strong uptrend filter. And these are ones that I'm just genuinely interested in. Some of these stocks, like Northrop Grumman, obviously, good Lord, this one's.
So if you're in your car right now, folks, I'll explain some of these stocks. You know what I like? I like that Boston Properties is still out there. That's intriguing, man.
Yeah. Some of these, again, these are ones that are showing themselves like with their hand up, saying, "Hey, I'm still hanging in there, and I'm still, by definition, of balanced areas that we gauge everything on." These are the ones that are saying, "Hey, we're hanging in there, guys."
Yeah.
we got a little bit lesser filters here, uptrends, but there's a lot of ways to use this scanner, and I don't trade without it personally. But some of the things, like if you look at the ETFs, I mean, utilities, obviously this is kind of the anti-sector. This one's showing up on our ETF heat grid, and this is where you kind of hide on a day like today.
Yes. And what's so intriguing about that, what happens, folks, is that it's just like, people don't think the bond market's going to go higher, and it just keeps going higher. And guess what? Utilities, it would be the same argument that if the Fed's going up, guess what? Dividend stocks should be going down. Well, guess what? They're not. So that's giving you an indication that the Fed might be saying they're going to go up again, but more than likely they're not going to be going up. And that's probably because the market's going to be going down.
Yeah. Well, can you talk S&Ps for a little bit?
Yeah. Oh, definitely. I'll talk S&Ps.
All right. So, and I'm getting used to your new time schedule still. So I'm still,
you're doing fine.
I'm watching the clock. Here. So the S&Ps, if you look at this, and again, this is something we talked about, we went back into balanced area on Monday.
Yeah.
Yesterday we came down and touched that inflection.
Pierced it, yeah.
Yeah. And
you stay right there, John, all right?
All right. Okay, cool.
John and I are coming right back, folks. You stay right there. We're going to be right back with you. Dow finished down 252, NASDAQ off 55, S&P's down 25. And don't forget, folks, no matter where you are in the world, you can get us right on your cell phone, TFNN.mobi or TFNN.com. Hit the Tiger TV button. You're going to see audio and video. We're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. We're talking with our man, Mr. John Logan. John is on every trading day, folks, 8 o'clock in the morning, kicking us off right here at TFNN. Now, he also has the Taz Profile Scanner. It's an awesome scanner. You can come over to our website. You can test drive it right here, right now. 14 days, absolutely free. When you're over there, what you also can do, there's videos along with it. You can see how this thing works. And, of course, if you listen to him every day at 8 o'clock, he is walking us through the markets using the scanner. Right now, we're going to be looking at the S&P 500. Okay. So I'm looking at the speed dials. I'm looking at what you got up here on the charts.
What was really interesting, Tom, towards the close, I don't know if you can see this. There's a pretty prevalent yellow section in that 60-minute speed dial. So what it's saying is, hey, we're, by math, 46.31% negative on the 60-minute breadth.
Yes.
And we had some overextensions, and a fella called into the show the other day and pointed this out, very well. When you're getting above 70% on this overextension indicator on 60-minute 240s, things like that, you can kind of look at this as almost a really good overextension situation, no matter what the inflection points on the index are. But when you put in this base of this 105, 21% on our short term, starting to put in a base, a new demand area on over 20% of the stocks in the S&P on a short term, that's an indicator in itself. And we had the overextension, we had a little bit of this. This is short term now.
Yes.
And we've had some decent down days here, and I'm not so sure that it's time to sell resistance again, getting back up to that 1994 area. I'm just going to have to wait and see if we kind of pass that on the opening, and then it might be time, considering this breadth is more than likely on our 60-minute going to roll to positive. Again, dead cat bounce, maybe, if you will, however you want to look at it. But, we've had some decent pullbacks here. I mean, the market's come down. What have we come down? Over 100 S&Ps?
100 S&P points, 850 Dow points. Yeah, right.
Yeah, I mean, we consolidated down here, and then we kind of pierced it today. But, I mean, we're not closing that bad, I mean,
no, listen, man, I think we're going to bounce too, man. I love it. I mean, it's just, it's so sick, too. It's so sick because oil basically broke out its lows, man, and it has monster volume. So I was sitting there, John, you get a picture. I said, I can't believe this, man. The bear's going long, closing his shots, going into the close, and it's like, oh, my God.
Well, you know what? I mean, if you look at the global situation and you look at what the damage that has been done in China, and they kind of fix things their own way again.
Yeah.
And oil's kind of looking like it's going to hell in a handbasket. S&Ps are actually, it could be a lot worse. And I mean, I'm actually looking for a little bit of a trading bounce here. Again, I think the trend, obviously we've had some closes below 1994 in the dailies. It's a good traders market right now. I don't know, long-term investors, may have to sit on the sidelines right now.
Yeah, no doubt. Hey, so let's do, what I'd like to look at is this. Okay, I want to put this S&P up, and we'll figure out where these profiles are. Because when I look at this, let me do this a different way. So I'm sorry, go ahead.
1953 is our big long-term number down here.
Oh, good. That's what I wanted to know. Okay, 1953.
Yeah, that's the big one.
On the upside. I want to know the one on the upside to sell. Not necessarily, because I think we're gonna bounce like, we can get to 2000, 2015 pretty easy, I think. Do you know what I mean?
Right. Well, yesterday I was hoping we got up to 2025 to just whack it hard, but we never got up there, and I kind of missed that.
Oh, I like that one, because 2030 is the low of last Friday, which would be good. Last Thursday, because it was okay. That's cool. I see that. Okay.
Right. So guys who are trading Nadex options, and that's why I was really interested in what your former guest was saying.
Yeah.
These numbers are really good things to base trades off of on Nadex. We don't do any webinars with Nadex. We should. We probably will. And we need to talk about it more on our show. But this scanner really puts a lot of
I can see why. Right.
Serious kind of Maginot lines in force for you when you're looking at, not just kind of throwing things out in the wind. Let's wait patiently, or let's construct some spreads or strategies around these things.
No doubt.
sorry to go off on a tangent.
No, that's right. And you know what's going on, folks? There are so many things happening in the marketplace simultaneously right now. It is absolutely fabulous. It's not like you gotta wait for one trade. There's a lot of them. It's.
You know what one I was looking at on the scanner the other day, talking about so many different types of trades. I've been really, really not interested in looking at Walmart for a long time.
Yes.
And when we had the breakout last week, what was that at 69? Let's just call it 61.
Yeah.
And that coincided. This is our weekly view. That coincided with kind of a daily situation at the same spot there.
Yes.
And look at what happened today and yesterday of all times.
Yes.
This is a relative strength from Hades. You know what I mean? It's 61 and a half. You can orient some stops around there, and I actually think this particular stock could really get some legs back to 70.
Well, it's cool that when you're looking at it. So, folks, we're looking at the scanner right now. If you happen to be in the car, and what's going on, this was really cool about it, is that it has been in a vicious downtrend. Okay.
Yeah.
Well, it changed trend, and where John's saying with the 70, that's the first place that you have a profile on the way up, and that's important to understand, which is really cool, man. Do you know what I mean?
Yeah, I mean, you're going to get a little bit of a retracement back after this type of move up, but you know what? In a market, this is the really, really cool thing with this. In a market that's just gotten its head bashed in for the last couple of days or week or whatever, Walmart actually changed its entire tone,
right?
And now is giving you kind of a base to really lean on at the same time. I mean, and the theory we always talk about is, markets go down, you want to find stocks showing themselves. This is one of them.
And on a fundamental basis, it's like I never could figure out why it went from 90 to 60 anyway. It's like, oh my God! So we're buying nothing, right?
Yeah, and you know what? I mean, guys who are the big funds. I mean, this is a stock with a big market cap. And guys who are stepping into this, you don't want to fight them. You want to trade with them, just like on the way down. You don't want to fight them. I mean, why is this thing going down? I don't know, but that's where the buyers and sellers are saying the price is right now.
Yeah.
And as it kind of pops up. Even in a time like this, on a day of all days like this, I mean, and yesterday, this is incredible relative strength. Incredible.
Yeah, big time. Hey, you know what is interesting? I think we got to pull up Goldman Sachs. Folks, some of these banks, Goldman Sachs in particular, it's pretty amazing. Goldman took out its August 24th swing low today. So it's like, man, on a larger basis, it's like, okay, what's going on inside the banking structure? Because that's a big hit, man. I mean, you take a look at Goldman and watch this, folks. This is just I've been watching this saying, man, something is seriously wrong here.
Yeah. Wow.
Yeah, isn't that wild? So when you look at Goldman, folks, we know that that benchmark of August 24th is 172.10. Well, Goldman's at 169.84. Last 6 months it just went from 214 to 169, and wicked expansion of volume today. It's like, okay, man, what the heck is going on, inside of that? We go over to J.P. Morgan, and J.P. Morgan wasn't only down 92 cents, but that also had an expansion of volume. It's like, okay, these banks just can't handle higher price. Can I get you one more segment?
Absolutely.
Awesome, man. You stay right there. John Logan, Tom O'Brien, folks, we want to hear from you. Our phone number is 877-927-6648. Dow is closed down, 252. NASDAQ off 55, S&P's off 24. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. John Logan. And don't forget, folks, John kicks us off at TFNN every trading day, 8 o'clock in the morning, Monday, Wednesday, Friday. He's on Tuesday and Thursday, too, of course. And Tuesday and Thursday, we start programming at 7 in the morning. Get it all on your cell phone, TFNN.com. We're talking about, so you saw me bring up Macy's. You see, what's happening, folks, is that unfortunately, and this is, this is just Amazon taking over the whole world. Macy's, they're going to close a huge amount of stores and lay off like 3,000 people. It's
scary. I mean, it's scary what this internet and some of the mechanisms in place now. I mean, they ratchet down everything, ratchet down margins, grab market share. That's kind of a balancing act there, and people in normal distribution channels lose their job. It's just crazy.
And you know what's amazing, folks, is that I happen to use Amazon. We've used it a lot in business. Okay, personally, I really start using it like over the holidays, right?
Right.
Well, last night I'm home, John, right? And all of a sudden, I'm cooking some cheeseburgers, man. I says, I need a scrubbing brush, right? Mm-hmm. So I have my computer up, the futures are on. I said, I might as well go to Amazon, order it. Well, check this out. This is like how crazy this is, folks. So $11.99, right? Guess what? It's going to be at my house tomorrow, no charge. And so I hit the button. I says, man, this is sick. But then about 5 minutes later, I decided I needed another little gadget, another $10. And now both of those folks are getting delivered to the house. I didn't leave the house, and it didn't cost me anything. That's like insane. It's like, so now I realized right then, I knew Amazon was powerful, but I realized then, I'm not gonna leave the house for small things. I'm not gonna go up the store. Why would I take my car, go up the store, waste 20 minutes or a half hour to go get something when it's gonna be at my house in 2 days for nothing?
Yeah, but I mean, what if Amazon raised their prices 5% across the board? What would you do? Probably nothing different. You'd keep ordering from them, right?
Right.
So, but what do they make? Their margins, or excuse me, their net income is
nothing, right?
Is nothing. Right. I mean, it's a rounding error to a lot of companies.
Exactly.
And Jeff Bezos is worth zillions of dollars. I don't know how he plays, but when are they going to start doing some things like that? They've grabbed enough market share. It's crazy, and they've run so many businesses out of in the ground.
Yeah,
with
no,
the bottle,
there's going to be a problem at some point. There's no doubt about that. I can see that. Well, hey, listen, Macy's in itself, because I love Macy's too. Macy's has great stuff, and you never want to see anyone lose their job. Period. Well,
it's just not fair. It's cheating. I mean, like Macy's has got the brick and mortar and everything. The light bill, all the things that goes on with it. I don't know, man. It's a different era for sure.
It's definitely a different era, man.
So,
tomorrow, so folks, remember something. Monday, Wednesday, Friday, we have live programming 8 o'clock in the morning to 5 in the afternoon. Tuesday, Thursday, 7 o'clock in the morning to 6 o'clock in the afternoon. All of it right in your cell phone. If you've never tried Tiger TV, folks, try it. Just go to TFNN.com, hit Watch Tiger TV. It's going to come up. It'll blow your mind. I mean, it comes in clear. It's all digital. It's a high-end deal. You'll see the charts. You'll hear John kick us off. You'll hear Nico Page. Basil, Steve, Dave, Daryl, my son Tommy, Andy Heck, Larry Pesavento. We got a great lineup for you, and you'll not only learn a lot. You're going to have other people out here giving you great ideas, because in the morning when John's on, and I don't know if it was Tucker you were talking about, or, I know that folks are using your scanner, and what happens, folks, is that when traders use the scanner, they get to give feedback to everyone, and it's really cool because that feedback gives you an edge.
Yep.
There's no doubt. Hey, cooking brother, hey, get some sleep tonight, man.
I can't wait for the Asian markets to open.
I know, man. Unreal. Thanks so much, John.
All right.
Have a great one. Have a safe one. Always remember, folks, whatever you think about, you bring about. Have a great night. Have a safe night. Look forward to speaking it right here tomorrow morning. Go get them, folks.